Welcome to XM.com for today's Daily Market Comment by Ref Boyajian. I'm Christina Marujos. Markets reacted in the worst possible way to the UK's economic plan unveiled on Friday, sending the pound to rock-bottom levels against the US dollar while dumping UK gilts. Chancellor Kowalski Kurteg announced the biggest tax cuts in 50 years, but combined with the energy package, investors fear that borrowing could swell to unsustainable levels. Even if the tax cuts work in boosting the economy, this will make the inflation problem worse, forcing the Bank of England to hike rates more aggressively. That would then further add to the cost for the government to borrow record amounts, making the national debt unmanageable. Hence, this downward spiral in sterling. The pound plunged on Friday and again in early Asian trading today, hitting an all-time low of $103.82. The yield on 10-year gilts has shot up to 12-year highs, catapulting past 4%. But in the more immediate term, all eyes are on the Bank of England for a possible emergency rate hike to halt sterling's freefall. In other currencies, the frantic sell-off against the mighty US dollar began to ease on Monday. The yen was back under pressure but remained some distance from the 145 mark that could prompt further intervention from the Bank of Japan. The euro briefly hit a low of $0.9565 at the open following the early results from the general election in Italy, where a right-wing bloc led by the far-right Brother of Italy party looks set to win a majority in both houses of parliament. Italian government bonds have slid the most in the euro bloc during the latest rout, though yield spreads with German bonds have not widened yet to alarming levels. Markets are also grappling with a growing unease about what implications Russia's referendum on annexation in the occupied regions in Ukraine will have on the conflict. However, the heightened geopolitical risks did little to support gold against the backdrop of rising bond yields and a strong dollar. The precious metal started the week at near 2.5-year lows before steadying around $1,645 an ounce. Stocks also came off their lows after the S&P 500 closed at its lowest since June on Friday. U.S. futures were attempting to recoup earlier losses, while in Europe, German and French stocks had turned positive. This was a Daily Market Comment here at XM.com. Have a great week.